Good evening and welcome to the ShadowTrader video weekly for Sunday, May 6th, 2012. In last week's video I ended by saying we would sort of continue our narrative of what's been going on in the markets, and last week I was talking about advising a little bit of caution on the long side, and we talked about the May to November seasonality in the markets where it seems to be somewhat weak. Certainly it's playing out thus far. The first week of May was very bearish. Made some comments such as mixed signals, cautious, and less bang for the buck on long strategies. And it looks like if we look at what's happened in the market, especially over the last couple of days, given Friday's selling, that has certainly come to pass. We've really kind of sold off a bit, but still in range, and we'll get to that in a second. The first thing we want to talk about when we know we're having when we've just had a strong selling day that has just passed, is we want to make sure to take a look at how strong the selling was, and of course that can be done using market internals. This is the quad screen setup that we use every day in the ShadowTrader Squawk Box. You'll hear Brad reference this constantly. We do something called the internals on the quarters, where every 15 minutes we give you a reading of what's going on in these market internals under the hood. And we talk about the breadth on the New York Stock Exchange, we talk about the advanced decline line, and we talk about the NYSE tick. The breadth reading here was 6-1 negative on the NYSE, that's this one here, and almost 10-1 negative on the NASDAQ. So that is pretty strong. Those are decent numbers. Usually when these numbers get above 3 or 4 on either side, you have propensity to have directional moves in the market that are somewhat lasting, where they'll continue to move in whatever direction, if it's either 5-1 positive or 5-1 negative. So we had a trending day on Friday, meaning the market just went straight down from open to close, and the breadth readings were relatively weak. The AD line was not as bad as it could have been. There have been a lot of days where the market trends and you see the AD line pegged at minus 2,000 round down here, and it just stays there. We call that pegging because it just opens at like minus 2,000 and it won't leave. Sometimes there's very bullish days where the market trends up all day and it just stays pegged at plus 2,000. So be aware that this was not one of those days. You did not have every single issue, not every single, but almost every issue out there on the NYSE or on the NASDAQ just declining. The number closed here at 1570 with a low reading of 1784, so pretty bearish. Tick readings, same thing. You have, on a very, very bearish day, you won't get any of these 15-minute bodies above zero. Here you have at least a few closes on the 15-minute bodies above zero. So overall, I would give the selling like probably a 7 out of 10 or maybe a 7.5. Okay, so the reason I say that is because I want to take those comments and then move into where we are technically, so we keep everything in perspective. So we know we had pretty strong selling, not like panic, all-out selling, but decent selling. So where did that take us chart-wise? So first thing I want to do is I want to take a look at the minis here on the daily. And what I've done is I've drawn a channel using the tops here and the bottom. And what I think is really important about this, that a lot of people don't notice when they draw their channels, is the simple fact that most people are only interested in channel support on the low side. They're not thinking of channel resistance on top and then channel support on the low side of a channel that's moving down, I should say. Most people are interested in channel support in a channel that is moving up. So hence, on the SPX, you can see here I left both channels on. And here we have the fake out move that took us a little bit higher. When I say fake out, I mean because we broke out outside of the channel, went upwards, right? And since then we've rolled down. And again, why am I looking at this coming into this week? Well, because notice at the bottom of this channel here would be an undercut of the support level here at around 1358. And I think it's going to fake a few people out, and I think the market's going to stop like right about in here. And one of the other things that ties in with that, why I think that is possible, is if you look at the other markets here, right? Let's look at DJI, right? The Dow is actually a long way from that double bottom area. And the Dow could actually catch support here at a higher low, correct? And if we look at the comp, which is NASDAQ Composite, right? The NASDAQ Composite still hasn't fallen out of the main channel. So you have other market indices that, even though the S&P looks so bearish, these other ones have support a little bit higher. And look at the NASDAQ. The NASDAQ is still has a chance of maintaining the channel here in the 2900 area. So I think when you tie these mixed signals together, it makes the case stronger that the S&P is going to have a bounce here at the 1350 area, right here at the round number. Okay, so that's what I'm going to be looking for. I'm going to be targeting that 1350 this week. I think that the 1360 is certainly imminent. We should go there easily at some point next week. I'm expecting Monday's trade to be a little bit balanced because you have a very, very large expansion of range to the downside, right? And usually following the large expansion of range to either direction, you'll get a little bit of balance, and then you'll continue on. It's very, you generally won't get the next day to be another trending day down. Like, see these 2 days here, this is relatively rare. Usually you get this action here where notice how you had selling come down, then you had a pause of a small body candle. That's typically the way things work. So you see here how you get 2 days of selling, then you get pause. So we may get another day of selling straight down to it, but I think maybe pause first, and we have a little bit of contraction of range before we get more expansion to the downside, which I think we'll be targeting that 1351 in the coming week. Market profile, just to give you a brief look, this is definitely, I think, a feather in the cap for the bears. We did have extension of profile to the downside. We moved out of an area up here where there was a lot of balance. So the market finally moved out of it, and notice that for the first time in a while, the value areas did not overlap. This is the value area from Friday, which is the black bracket, and the value area from Thursday here is the black bracket here. And when I say overlap, notice that prior to Friday's action, it was constantly overlapping, right? You had a lot of action like this, either overlapping or balancing lower, and then not following through to the same direction, jumping up higher, lower, overlapping. So this is called a relatively clean break to the downside. This early on action here is somewhat of a liquidation break, which takes sellers out of the market. It's actually not bearish. It's actually helps the bulls because it takes sellers out of the market. But really the liquidation break was really just the beginning of the session, and then you started to build value right away. And then the market found acceptance and built some value down here at the 1366, which is going to be our point of control for Monday. And notice this, here's 1356 in the ES is the next POC, and that's why I was saying we're probably going a little bit lower because the market's going to probably want to explore this area and take us down to at least that 1356 area. Okay, so just to recap where we are here, selling on Friday was about a 7.5 out of 10, which is pretty strong. I do believe the market is turning somewhat to the downside. There is definitely a chance that it can rally off of the low end of the channel. So what we'll be looking for is if we see a lower high, and that would be our second lower high, which would be very telling, right? Because this high here in the S&P at the 1415-ish area is a lower high than the 1422. So we'll have to see if we make a third lower high or not, and if so, then this channel here will now be our dominant channel, and we'll be playing against this channel on either side. We'll be looking to buy bounces on the low end of this channel and maybe on sell rallies on the high end of this channel. I don't know how long this can last, only because this channel is not as steep as the uptrend, and that would be bullish. So picture a scenario over the next few months that if the market stays sideways and is intending on rallying later in the year, perhaps after the summer, then it would make sense that this channel will stay narrow and just go to the side, and it will be sort of a consolidation of the up move. Obviously, I don't know for a fact if that's going to happen or not. My job here is to present objective analysis and as many different scenarios as are possible to sort of jar your brain into a different mode of thinking, so you can sort of step away from the whole fear and greed conundrum and just sort of deal with what is, in the same way that we're all very, very good at dealing with what is when we don't have a position on. So you can think of it this as that I give you the analysis in the hopes that you will look at the markets with a very objective viewpoint as if you didn't have a position on. All right? Anyway, I'll catch you guys next week. I am headed off to Chicago this weekend. I'm very excited. I will be taking a seminar with the one and only James Dalton, as I call him the father of market profile, J. Peter Steidelmeyer being the grandfather of market profile. I will definitely report everything that I learned there in subsequent videos, and I hope to advance my knowledge of market profile by a whole ton. I'm very excited to meet the man himself. And that's it. So more next week on all that. I'll send out some updates on Twitter on the seminar if I can. And that's it. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I do wish you good trading and good night.